So, you've done it. You've launched your business in the UK. That's huge. But hold on, before you get too far into the celebrations, there's one absolutely crucial step you need to nail right from the get-go. We're talking about registering for corporation tax. And today, we're going to make sure you get it right.
And look, we're not just winging it here. To make sure you get the absolute best, most up-to-date advice, this whole guide comes straight from the experts over at ProTax Accountant. They've laid out the entire roadmap for us.
So let me ask you directly, have you just launched your new UK company? If the answer is yes, first off, a huge congratulations. But amidst all that startup buzz, we've got to talk about one of your very first and, honestly, most important financial moves. This is the big one. It's the one financial step you absolutely cannot afford to get wrong. Getting this right from day one sets the foundation for everything that comes next.
All right, so here's the game plan. We'll kick things off by figuring out what corporation tax even is. Then we'll see who's on the hook to register. After that, it's the step-by-step roadmap, what you need to gather before you start, and this is key, what happens after you register. And, of course, where to go if you need a hand. You ready? Let's dive in.
Okay, first things first, let's get our bearings and map out the terrain. What in the world is corporation tax, and what does it mean for your brand new business?
So, what is it? In a nutshell, corporation tax is just the tax that UK companies pay on their profits. Simple enough, right? Well, it's not just about the money you make from selling your products or services. It also covers profits from any investments you have, and even from selling company assets like an old delivery van or some office computers. And to give you an idea of how big a deal this is, here's a little did you know for you. In the 2023 to 2024 tax year, HMRC raked in a whopping £88.3 billion from corporation tax alone. Yeah, it's a pretty major part of the UK's economy.
Okay, let's get into the numbers. Let's talk rates for the 2025/26 tax year. If your company's profits are under £50,000, you're in luck. You fall under what's called the small profits rate, and that's set at a nice, clean 19%. But what if you're doing really well? If your profits soar past £250,000, you'll be paying the main rate, which jumps up to 25%. But here's the million-dollar question. What happens if you're in that area between 50 grand and 250 grand? Well, you don't just leap from 19 to 25%. Instead, there's something called marginal relief. It's basically a sliding scale that eases you into the higher rate. Honestly, for a growing business, understanding this is absolutely crucial. All right, so we know what it is. We know the rates. But the real question is, are you on the list? Do you actually need to register for this? Let's figure that out right now. The rules here are actually pretty black and white. If you've incorporated a company in the UK, you have to register the moment you start any kind of business activity. And activity is a broad term. We're talking buying or selling, sure, but also just running ads, hiring staff, or even leasing a small office space. And this is the part that catches people out. It doesn't matter if you're making a profit yet. Even if you're in the red, if you're active, you need to register. It's about the action, not the income. Okay, everyone, lean in for this one. This is probably the single most important deadline you need to remember. HMRC gives you exactly 3 months from the day you start your business activities to register for corporation tax. This is not a friendly suggestion. It's a hard and fast rule. Miss it, and you're looking at penalties right out of the gate. Okay, deep breaths. You know you need to do it. You know when you need to do it by. So what's the actual process look like? Let's walk through the registration roadmap step by step. It really boils down to 5 main steps. Step 1, you've got to be incorporated with Companies House. Step 2, set up your government gateway account. Think of it as your digital passport for all things government. Step 3, get all your info together. Step 4, do the actual online registration. And finally, step 5, you'll get that confirmation letter and your super important UTR number. That's your Unique Taxpayer Reference. Now, hold on. Before you rush off and log into the government website, let's talk about prep work. Getting your essential toolkit ready beforehand is going to make this whole thing so much smoother. Seriously, treat this like a checklist. You're going to need your company registration number from Companies House, your company's official name and address, obviously, the exact date you kicked off trading, your main business activity, which is identified by something called an SIC code. You'll also need your accounting period dates, the details for all the directors, and your certificate of incorporation. Get all of this in a folder on your desktop before you start, and you'll thank me later. And while we're on the topic of paperwork, here's a pro tip for you that will save you a massive headache down the line. HMRC legally requires you to keep all your financial records for at least 6 years after the accounting period ends. I'm not kidding, 6 years. So get a good system in place now. Trust me on this one. Okay, you did it. You're registered. Time to kick back and relax, right? Well, not quite. And stay with me here, because this next part about deadlines is genuinely where so many new businesses stumble. Let's look at what life is like after you've registered. Okay, this timeline is mission critical. As soon as your accounting year ends, 2 different clocks start ticking. Clock number 1, you have 9 months and 1 day to pay any corporation tax you owe. But clock number 2 gives you a full 12 months to file your company tax return, also known as the CT 600. People mix these up all the time, and it's a really expensive mistake to make. The key takeaway, you have to pay before you file. Burn that into your brain. Look, I get it. This can feel like a lot, especially when you're just trying to get a business off the ground. And that's totally normal. Which brings us to our final section, how to get some expert help on your side, a real guide for this journey.
Now, you absolutely can go it alone, but let's just lay out the 2 options. The DIY route often means wrestling with complicated rules by yourself, running the risk of making a mistake that could cost you, and sinking hours into research that you could be spending on, your actual business. The other path? Working with an expert like Pro Tax Accountant. That means you get guidance every step of the way, you know everything's accurate and compliant, and you free up your time. But more than anything, it's about the peace of mind, knowing it's done right and you're safe from penalties. So, if you're thinking, yeah, I'd rather just get this right from the start, here's how you can get in touch with the team at Pro Tax Accountant. You can ping them on WhatsApp or give them a call at 07985 689912. Or if you prefer, shoot an email over to info@protaxaccountant.co.uk. If you want to read this all again, they've got a fantastic detailed guide on their blog. And hey, while you're there, make sure you subscribe to their YouTube channel for more tips just like this. So I'll just leave you with this one last question to chew on. Is your business set up for maximum tax efficiency right from this very first day? It's a big question, and the answer could really define your company's financial story. And just before we wrap up, the important legal bit. The information we've talked about today is for general guidance. Because every business is different, you really shouldn't rely on this alone to make financial decisions. Before you do anything, your best bet is always to consult with the tax experts at Pro Tax Accountant. They're ready to help. Thanks so much for watching.